morning. I always like talking to this group. And one thing I try to do, since you guys are kind of the front line with members in the state, is when I talk about emerging issues, I try to give you some answers and some tools to answer those questions that you get from members in the state. So I've kind of thought about the topics I wanted to talk about in two categories. The first would be, what are we, or APMA, getting calls about? What are the members asking APMA about? And then the second category, what I'd like you to know about, I expect you're going to get questions about. So we'll jump right in. One of the things we have been getting questions about is dual eligibles. And there's a whole kind of alphabet soup of types of dual eligibles. The only ones you really have to care about are those qualified Medicare beneficiaries, and these are the only ones that are going to be transparent to you. Most dual eligibles fall into this category, and for this category, Medicaid pays their Part A premium, if they have any Part A premium, Part B premiums, and most importantly, the deductibles and coinsurance. And we'll talk a little bit, it may not be in full, it may be just a portion of those. And then there are qualified Medicare beneficiaries who are also eligible for coverage of Medicaid services. The important thing here is just to keep in mind, for the past 30 years, it's been a violation of federal law for Medicare providers to balance bill qualified Medicare beneficiaries for the Medicare cost-sharing amounts, and that's the deductibles and coinsurance. And it doesn't matter whether you're a Medicaid provider, any provider who violates this prohibition violates their Medicare provider agreement and can be subject to sanctions. And those sanctions could be civil monetary penalties, they could be exclusion from Medicare, which would be pretty draconian. It also applies regardless of where the qualified Medicare beneficiary gets their Medicare benefits, whether it's fee-for-service or a Medicare Medicaid plan or a Medicare Advantage plan. You can't bill the qualified Medicare beneficiary for that cost sharing. And it also doesn't matter whether the procedure or service furnished is covered by Medicaid. In fact, Medicare Advantage organizations are required by law to put in your provider contracts a term that specifies this, that you will not bill these qualified Medicare beneficiaries for cost sharing. Now, I mentioned that the state's responsible for paying for the cost sharing through Medicaid, but you may get nothing or you may get just a small bit. States are allowed to limit reimbursement for that Medicare cost sharing under certain circumstances. And you've probably heard of this. It's called the lesser of policy, and it was implemented in '97. It's an old policy, and basically it says states have the option to pay the lesser of the full cost sharing amount or the amount by which Medicaid's rate exceeds the amount that Medicare paid for the service. So if the Medicaid rate is lower than 80% of the Medicare rate, you just eat the cost sharing. You can't bill the beneficiary, and Medicaid's not going to pay. I'll give you some examples of this, how this lesser of works. So if there was a service that had a Medicare allowable amount of $100 and a fee schedule amount of $86 under Medicaid, the state would only pay $6, and that's because, you know, Medicare's paying $80 and 86 minus 80 is 6. And it works the same way with deductibles. And I notice I've got a $166 deductible on Part B, and that should be $183, and the math's different, but bear with me. It's an example of how it works. Most states actually have implemented this lesser of policy. It's very few states that actually guarantee that you'll get paid for your cost sharing, and I would say this 2012 was the last time I saw this list, and I would say it's probably smaller now. So who do you go to for the cost sharing when you have a dual eligible and you've provided the service? It's really easy if the dual eligible has original Medicare and original Medicaid or state fee-for-service Medicaid. You just go directly to the state. It gets more complicated depending on whether they have a Medicaid managed care plan. It could be the state or it could be the plan. You have to find out in the state plan. In most Medicare Advantage plans, if the person has Medicaid fee-for-service, you're still going to go to the state to get the cost sharing. And the more plans they have, the more complicated it gets. But there will be one rule, and all you have to do is nail down that rule in your state for those plans. And there are certain plans, and we'll talk a little bit more about these, that are integrated, so the plan will pay both the Medicare and the Medicaid share, and that's those Medicare and Medicaid plans, which, as I mentioned, we'll talk about, and certain special needs plans under Medicare Advantage. So how do you kind of take this all in and operationalize it in your practice? You first got to figure out how to identify who's a qualified Medicare beneficiary. You need to find out what cards are issued to qualified Medicare beneficiaries in your state, or find out if you have a way of querying the state system to verify qualified Medicare beneficiary status. For Medicare Advantage enrollees, you can contact the plan to determine how to identify these qualified Medicare beneficiaries. Then, as I mentioned, though it is somewhat catchy, you have to determine what billing processes apply to those individuals. For Medicare claims and fee-for-service Medicaid, most states actually have an electronic crossover process, so once Medicare pays it, they bounce it back to the state Medicaid program, and your remittance from Medicare should let you know that the claim's been crossed over for Medicaid to pay their portion. But that only applies in the original Medicare context. You also want to make sure that, you know, any billing software you have or your administrative staff actually exempt those qualified Medicare beneficiaries from the cost share billing and any collection efforts. The collection efforts really get on CMS's radar because that's when the beneficiary complains, and that's really what tips everything into a more compliance mode, or at least corrective action. I said this has been in place for 30 years, this law, but in July in 2015, CMS released a study and showed that most physicians are confused about it, and they continue to inappropriately balance bill. So if this is news for you, you weren't the only one. In February 2016, they first updated their guidance, this Med-Learn Manners document, which is really great to go to understand this. They actually just updated it again in October. And in the October update, they talked to states about better identifying these individuals. In the Medicare Advantage context, in the annual call letter, CMS reminded plans that they have an obligation to make sure that these beneficiaries aren't inappropriately billed, and that they have to educate their providers, monitor compliance, and certainly they need to let you know who is a qualified Medicare beneficiary. So I said we'd talk about Medicare and Medicaid plans, which is another area the APMA has gotten some calls on. This came under the financial alignment demonstration that was under the Affordable Care Act. CMS is looking to better align Medicare and Medicaid payment and services. So it calls for demonstrations in different forms. They can be managed fee-for-service. They can be a primary care case management situation under Medicaid, or they can be these Medicare, Medicaid plans, which is where we're getting the question. They are only available in demonstration states, and you'll see right now these are the states where there are actually plans located. And within those states, they may be limited to just certain counties in the state. I know that's the case for California, that's the case for New York. And it may not be all dual eligibles that can enroll, and we'll talk a little bit about what kind of subsets, but the state is allowed to set up their own demonstration and decide who can enroll. It's important to know that these Medicare, Medicaid plans are not Medicare Advantage plans. They operate under a lot of similar rules, but they're not Medicare Advantage plans. So some of the state limitations might be that only beneficiaries 65 and older can enroll, or the only beneficiaries who are eligible for skilled nursing care could enroll, or there's even a demonstration where it's limited to 65 and under disabled beneficiaries. The important tool on this, if you have Medicare and Medicaid plans in your state, and I use this tool all the time to understand what's going on, CMS has on its website a page for this financial alignment integration demo, and there is the memorandum of understanding for each state which lays out what the demonstration does, so you can actually take a look and see what populations are covered and some of the rules around the demonstration, what counties that are in. It's a really handy tool that I use a lot. One big thing that got attention early on in this, I know that APMA California members were particularly concerned about this, is that the Medicare and Medicaid plans can automatically enroll beneficiaries into their plan unless they opt out of the plan. And I know a lot of physicians at first were concerned about losing their relationship with their patients if they got passively enrolled in one of these plans that the physician wasn't contracting with. You can mandate somebody enroll in a certain Medicaid plan. You cannot mandate that they get their Medicare from certain providers, so they had to give that opt-out option. But you still have people being passively enrolled unless they do opt out. So it is changing relationships out there in some cases. So currently there are 58 contracts to offer these Medicare and Medicaid plans, and about 410,000 individuals enrolled. It's a pretty limited demonstration, but it does have a significant impact on physicians who are in the areas where the demonstration is happening. But if you're a physician, a contracting physician for one of these plans, the nice thing is they do integrate that Medicare and Medicaid portion of the billing. You don't have to go to the state. The plan pays everything. I'm not saying that it pays 100% of Medicare. You know, that's up to your contract. And of course, all the enrollees are going to be qualified Medicare beneficiaries. So if you're seeing somebody enrolled under a Medicare, Medicaid plan, there won't be any balance billing for those beneficiaries. And of course, we continue to get questions about Medicare Advantage. And I thought it would be really good with just a snapshot of what the landscape looks like out there with Medicare Advantage plans. Right now, a third of beneficiaries are getting their Medicare through Medicare Advantage plans. And in fact, that grew 8% between 2016 and 2017. So the portion is still growing. There were 2,034 plans available nationwide for individual enrollment in 2017. So one organization can offer multiple plans, so that doesn't mean there are 2,034 organizations offering plans, but there are a lot of Medicare Advantage choices out there. And the most popular choice by far is the HMO model. 2/3 of individuals who are in Medicare Advantage are in an HMO. 238 plans exited the market in 2016, but most of this was just because they had very low enrollment, couldn't achieve economy of scale, and CMS requires low enrollment plans to be taken out. There were 271 plans offered for the first time in 2017, and I think one of the most interesting things about this snapshot is looking at the plans in the market. So those 271, half of them were offered by United Healthcare, Aetna, and Blue Cross Blue Shield branded plans, which I think is pretty remarkable. United Healthcare alone accounts for about 1/4 of all new MA plans. Aetna and Humana accounted for another 1/4 of plans. And there were new organizations offered in 9 different states last year. What I'm seeing right now is I'm seeing a lot of applications out there, but mostly for smaller plans, and I'll talk a little bit about that, but we're putting together a lot of applications and putting together a lot of new plans for next year already. Again, just the market is crazy. So in 2017, 8 organizations and their affiliates accounted for 77% of all Medicare Advantage enrollment. And those organizations, there's nothing on there you haven't heard of. It's all the big health plans. United and Humana are the biggest players by far in the Medicare Advantage market. They offer 41% of total Medicare Advantage enrollment. When I talked about, the number of plans being offered, those were the plans that are offered and available on the general market. Medicare Advantage plans also offer a lot of closed employer group plans, a lot of these plans. Some of them are even nationwide, but they are employer group specific. The employer group may add extra benefits to the plan, but it's only offered to their active employees or their retired employees. So in terms of what's going on right now in the Medicare Advantage program, the new administration says it's going to give plans a lot more flexibility. And they issued a request for information in the most recent call letter, which is the letter that comes out every year and tells plans what they got to do and what they're going to get paid. The key enforcement and scrutiny area has been network adequacy. And I know this was a big issue a few years ago with APMA members when Medicare Advantage plans were squeezing their networks, and a lot of people were finding themselves being terminated from networks. At that time, CMS said, basically, we can't do anything. We can make sure they still meet network adequacy standards, but as long as your contract allows it, we really can't do anything about it. But they have started looking a lot more at network adequacy. In fact, they're going to be doing regular reviews of network adequacy on plans. Unfortunately, for new applications, for some reason, they are not reviewing the applicants during the application process. We're not quite sure when they're going to do it, but it'll probably be right before marketing and enrollment. All they're having the plans do is put an attestation in their application that they will have a network that meets network adequacy. The thing about this is, and I'm still trying to get my clients to get networks put together in a really timely manner because we don't know how this is going to play out. But physicians had a lot of market power during this time of the year when everybody's scrambling to get an adequate network because they wouldn't get their application approved. They'd put in millions of dollars to put together a plan, and if they were missing a podiatrist in Marion County and they didn't have a way to do it and there was no exception request, it was too bad. Your application got denied. So during this time of year and the cycle of applications, physicians had a lot of market power. If you were somewhere and you knew you were the only game in town and the only way this plan was going to get network adequacy, you could pretty much ask for what you wanted. That's still going to happen, but the rush isn't on. They have a lot more time to think of alternatives because they're not going to have such a short window in order to get their network together. So that's something that'll change this year. CMS did in the call letter specifically ask whether there should be different network adequacy standards for Medicare Advantage special needs plans. And I raised this because it's important to us. We comment on this because we've been putting together a bunch of Medicare Advantage institutional SNPs. These are Medicare Advantage plans just for people who are in long-term care. And one of the issues we've had with network adequacy is there's a podiatrist that will see all the people in this facility, but the podiatrist doesn't have an office. They just are totally facility-based. They go around to the long-term care facilities. And CMS wasn't allowing us to count those podiatrists for purposes of network adequacy. So we had just big areas where we couldn't go into. And that was one thing we asked for, was that they would count facility-based podiatrists or podiatrists who just practiced in facilities for purposes of network adequacy, because in fact it's more convenient to the members to have the doctor come to them than to have to, particularly in an institutional setting, to leave and find a doctor, and particularly when it's not a doctor who's nearby. Another interesting thing they did last year and started doing, and we'll see how it pans out this year, was for plans that were applying for a service area expansion, CMS made them submit their entire network, not just the expansion area. And if you didn't meet network adequacy in your current service area, you weren't getting an expansion. They would just deny you. So it was another way that they were really enforcing the network adequacy requirements, which is good for physicians and it's good for patients. Make sure everybody has access to care. I mentioned those institutional special needs plans. There are several types of special needs plan, and this is a real big area of growth in Medicare Advantage. There are dual eligible special needs plans, and sometimes these look a lot like those Medicare and Medicaid plans, but they actually are Medicare Advantage plans. Some of them are actually fully integrated, so they're getting Medicaid and Medicare payment, but in most cases, the state retains the responsibility for Medicaid payment in these plans. They're the institutional special needs plans that I mentioned, and they can either be people in a skilled nursing facility, and typically what I'm seeing is skilled nursing facility companies start these plans, or they could be what they call institutional equivalent skilled special needs plans. The institutional equivalent, you can serve the person in the community. And what we're seeing there is some of the assisted living facilities are starting plans and limiting enrollment to those individuals who are living in the assisted living facility. There are also chronic care special needs plans that provide services to individuals with certain chronic conditions. We see a lot of these for diabetes, which would be a great opportunity for podiatrists. And we see a lot with congestive heart failure. For the special needs plan, one of the special requirements of them is to implement this model of care. They really have to say why they're going to be special, how they're going to manage care, what is it that they bring to this game that specially serves this population. One of those things that has to be part of the model of care is an interdisciplinary team, physicians, nurse practitioners, social workers, that actually meet and talk about each individual's condition. The thing about special needs plans, though it's not 100% the case, but we see a lot of smaller, locally based plans. I think the big exception is Care Improvement Plus, which was it's the biggest special needs plan or organization offering them in the United States. But most of them we see are much smaller, and often they'll be provider-based. The provider will own them, or they'll be owned by a disease management company. We see the dialysis companies starting special needs plans for people with end-stage renal disease. So in terms of the questions we get about Medicare Advantage plans, we hear a lot about what the physician is getting paid and whether it's correct. So for contracted providers, what the plan has to do is pay in accordance with their contract with you, and CMS will generally not get involved in disputes between providers and Medicare Advantage organizations. Those Medicare Advantage organizations aren't obligated to recognize the same modifiers or otherwise pay in the same manner as fee-for-service if their contract allows it. Now, this is for contracted providers. But we are seeing a trend where if there is a contract dispute, even though CMS won't get involved, we are seeing some physicians taking those to state court, even though typically there's federal preemption, but we're seeing some of those cases being able to go to state court. The next bullet should say non-contracted providers, and I apologize for that. Now, if you are a provider furnishing services to a member of a PPO, payment rules are all different when you don't have a contract. You do have to be paid the same amount you would have received under Medicare fee-for-service. This means they're going to have to recognize modifiers in the same way. There are little exemptions for a small number of deemed providers, but generally you're going to get the same amount, and by law you have to get the same amount. The closely related issue is coverage. We get a lot of questions saying, you know, this Medicare Advantage plan is not covering the same things that Medicare fee-for-service does. I'm getting denied for things that would be covered under Medicare fee-for-service. And the rule is that Medicare Advantage plans must cover all services that are covered under Medicare fee-for-service. They can also cover any supplemental benefits that they want, that they file with CMS. They also must follow national coverage decisions, and they generally must follow local coverage decisions. There's an exception that allows them to adopt a uniform policy for local coverage decisions, but they generally have to pick the local coverage decision that is the most favorable to beneficiaries, and they have to let you know on their website or otherwise that they've adopted this uniform local coverage policy. The other thing they can do with their benefits is they can put into place utilization review requirements that aren't used under Medicare fee-for-service, like an obligation to show medical necessity or a prior authorization requirement that doesn't exist under Medicare fee-for-service. And I think I've heard this probably most with diabetic shoes, that they don't just automatically cover them when they're due, that they might require some showing of medical necessity rather than automatically covering them. And they're allowed to do that, but they have to cover them if they're medically necessary. I think also this concept of covered and what it means is really a little tricky. So just because it's covered doesn't mean you get paid for it, which I know, yeah, I see those faces. I know that makes no sense. But what happens is, because if you're contracted, it doesn't mean that they have to separately pay for the service. They could bundle it. They could treat it differently than Medicare fee-for-service. What it means is that the beneficiary has to be able to obtain the service when it's medically necessary for the cost sharing set forth in their evidence of coverage and no other charges. They don't have to pay for it out of pocket. Another topic I just thought you should know about, and you'll hear more about this, is a new rule, Medicaid rule. So if you're providing services to Medicaid managed care organization, in the past you didn't have to be enrolled in Medicaid to do that. And they are changing that rule. Generally it'll start January 1st, 2018, unless your state has a fiscal year for their plans. So you will have to enroll in Medicaid, but it doesn't mean that you have to accept Medicaid fee-for-service. It just means in order to contract with a Medicaid managed care organization, you do have to enroll. And that enrollment is a state screening process and periodic rescreening. It includes verification of licensure, criminal background checks, depending on the risk that they perceive. It could include site visits, probably wouldn't for everybody, federal database checks, reviews of the disclosures you had in your applications. And it's important, actually, that right now the predominant form of service delivery in Medicaid is managed care organizations. But this is going to be a dual process. The states, yes?
A question. I'm going back to this slide. You said that if you were in a Medicaid managed plan, you would have to enroll in Medicaid, but you don't have to see Medicaid patients?
Yeah. So what that means is, no, if you're in the plan, you have to enroll, but you are not obligated to see Medicaid fee-for-service patients. You can decide, I'm only going to provide services to individuals in this plan that I contract with, but I'm not going to see any Medicaid outside of this plan.
Is that usually delineated in the contractual agreement that you might have in the state? Or?
Well, it's definitely in the law. The law specifically specifies this. So the state should be aware of that. You would not have to see those fee-for-service patients. Just a quick, and I know I'm jumping all around, but there are a lot of topics here. A quick discussion about the Affordable Care Act. While people were thinking it was circling the drain, and in April they did do a rulemaking changing certain aspects of it. They shortened the open enrollment period, which I'm sure you've heard a lot about. They were afraid of people playing games with the enrollment periods, so they're requiring documentation to get in mid-year outside of that open enrollment period. They were also worried about people gaming the grace period, where you have those 90 days to pay your premium before you're kicked out. And what they did with that was they changed the guaranteed issue rules. So if you did not pay your premium, you got kicked out, you can't turn around at the beginning of the year and re-enroll in the exact same plan in order to game that grace period. It's a limited fix. You can enroll in any other plan. But if you want to get back in the plan you were in, you got to pay the premium that's past due. They also provided some flexibility with those kind of metal groups, you know, the bronze level, the silver level, and gold and platinum. They provided some flexibility with the actuarial valuation of them. So the plans would have a little more flexibility in developing their benefit structure. They also got rid of federal review of network adequacy and just said, states, you do it as part of your licensure process. So there's no federal review of network adequacy anymore for those Affordable Care Act plans. We wouldn't want the federal government to be consistent.
How do they determine network adequacy?
There are all kinds of configurations. Sometimes on the state level, the state makes it, and it's usually a travel time or distance standard, and based on potential enrollment. So you need X number of primary care physicians per X number of enrollees. But it's usually geography-based. So you're going to be looking at time and distance to get to particular physicians. And also under the Affordable Care Act, I wanted to talk about where we are with the provider non-discrimination provision that was under the Affordable Care Act. On the regulatory front, you know, back in March 2014, the agencies published a request for information looking for comment on the provider non-discrimination provision. They specifically asked for comments on access costs, on other federal and state laws, and feasibility. And they got over 1,500 comments. And I know APMA submitted a very strong comment on this. They haven't done anything about it, but they're sitting on 1,500 comments about how the law should be enforced. In December that year, the House Committee on Appropriations basically said, CMS had said you could really vary reimbursement based on market conditions and all these other factors. And the House Committee on Appropriations basically said, that's not what the law says. And you have a frequently asked question out there that says that, and we want you to fix it. And they finally got around to fixing it in May of 2015. They just retracted that frequently asked question. And it really wasn't much of a fix. And then they announced that until they issue further guidance, they're not going to take any enforcement action against plans and insurers with respect to provider non-discrimination, as long as the plan or insurer is using a good faith, reasonable interpretation of that statutory provision. So on the federal regulatory side, we're not seeing much action or much enforcement. So let's turn to see what's going on in the courts. I've talked to you before about this lawsuit that was filed in 2015. The Oregon Association of Naturopathic Physicians was behind the filers and financed this lawsuit. And they allege it was against Health Net. They allege unlawful and discriminatory practices, and I'll talk about those and you'll recognize every one. As initially filed, their plaintiffs were 2 naturopathic doctors and 3 patients. The association wasn't named as a party. So the kind of practices they were upset about, and they were alleging that violated the provider non-discrimination rule. And some of these, I can tell you, it could not be more clear to me that these are violations. They were putting an annual limit on the number of reimbursable visits to naturopathic physicians. They were requiring medical necessity review that other providers weren't required to provide for the same service. They had a cap on the maximum reimbursement allowable. They limited the scope of medical services that the naturopathic physicians could provide when these services were clearly in their scope of practice. And they reimbursed naturopathic doctors at about 80% less than other providers for the exact same services. So this went through a long list of procedural motions and such. Health Net filed a motion to dismiss, which was partially granted. The association amended their complaint. The judge dismissed claims, but finally in April, the whole case was dismissed. The merits of the case were never considered. The problem was that the patient plaintiffs couldn't show enough harm to have standing in the case. So to mitigate the damages, the association agreed not to appeal the dismissal. And I talked to them about this, and they're very happy to help anybody else who wants to bring a lawsuit. They have this very defined list of the lessons they learned in doing this. The first lesson they learned is you really have to bring the case under ERISA. Physicians don't have standing under ERISA, so it's going to be patients. You also have to find the right patients. They have to be able to show that the patient was damaged by the discriminatory policy against the provider, and they learned that there's really no way to address pay disparity through patients, that the lawsuit wasn't going to be the mechanism to do that. In September, the New Jersey Chiropractor Association filed suit against Horizon Blue Cross Blue Shield, and it was under the non-discrimination provision, and they were looking at Horizon's tiering structure as being discriminatory. And it was a typical tiering structure. You were incented to see Tier 1 providers. You had a lower deductible and cost sharing than Tier 2 providers. But this wasn't like it's a $30 bigger copay. This was like, if you see Tier 2, you have a $2,500 deductible and $50 coinsurance. Like, nobody in their right mind is going to go see a Tier 2 provider, in fact. And when they looked at the structure, only like 6.4% of in-network chiropractors were designated Tier 1, while they were seeing, almost 80% of in-network physical therapists were Tier 1, 77% of in-network occupational therapists were Tier 1, and so on and so forth. They were clearly the smallest percentage. Unfortunately, in June, the U.S. District Court for the District of New Jersey ruled that a claim pursuant to that provider non-discrimination provision had to be dismissed on the grounds that it doesn't create a private right of action. Private citizens, under just that federal provision, do not have the right to enforce the law. So that was bad news. That doesn't mean ERISA's not a remedy. It means exactly what they said, that you got to sue under ERISA, but it's going to be really limited, and you're going to have to show damages to the patients, and the physicians really don't have a cause of action. That really leads us to...
Are the damages monetary or are the damages physical?
Oh, for the patients, they could be either one. They could be either one, yeah. They just have to show that, somehow this discriminatory activity is creating a problem for them. In light of all this, I've been thinking about this a lot and what the approach is to get this enforced and where to look next. I think I haven't given up on state regulators. We know in some states, for example, Oregon, they went to the regulator first, and Oregon had its own provider non-discrimination law, and they weren't willing to really enforce it. But we've seen in Colorado, when we've seen discriminatory benefit structures, Colorado's clearly said that those violate the provider non-discrimination laws. So I think state regulators are still the place that we could go to seek enforcement. It's not 100%, but I don't think it's worth giving up yet. Yes? No, this was a lawsuit that was dismissed. Yeah, they got nothing on this one. But I'd be interested in learning about the one you're mentioning. Based on that district court decision, I'm guessing it probably wasn't brought in. It was ERISA, yeah, okay, yeah, because this was not under this claim, so I'll go back and look. But I had not seen any other brought under Section 2706. And I've been trying to keep a big eye out for that. So that's all the good news for today. If anybody has questions. Oh, sorry.
Yeah, I have a question on the QMBs. This is something interesting to me. A good friend of mine had an issue with that, so I'll make a long story short. So he was Medicare, fee-for-service and Medicaid in Iowa. So I helped him out because I knew a little bit about this. So we went to the state, and nobody cared. So then we decided to go to Medicare. And I was with him all the times that he talked on the phone, and I was prompting him what to say and things like that. And we found out that at the Medicare level, we couldn't get any action. We couldn't find people who were knowledgeable about this. So I was just a little concerned about what they make it a big deal that you can get disqualified from the Medicare program and things like that. But is it really a big deal? Because we couldn't really find anybody who cared. So I finally told them, just don't pay the bill, just let it go. They turn them over to collections and things like that. So that's kind of where we're at with this. So any comments on that?
I mean, based on the fact that they keep updating the policy, and the General Accounting Office did a investigation to find this going on, and they've put out new policies for Medicare Advantage plans to make sure it happened. You would think it's clearly high on somebody's priority list. I don't know, were you talking to your regional office?
We just went through the CMS, website, phone numbers, and who to call for complaint, that kind of stuff.
Yeah, that surprises me. So, some disconnect.
Yes, so.
Is it, in your opinion, that this resurgent growth in the managed care plans is based on government's subsidy of those plans, or are they actually achieving, efficiencies of care and becoming, showing profitability in being able to better manage patients' health care?
Well, it's definitely, Medicare Advantage plans had their rates pretty significantly cut a few years ago. So it's not that they're getting paid a lot right now. And then we know that they did also impose an 85% medical loss ratio on the plans. So it's not that there's so much money in the market. I think like a lot of health plans, they probably have about a 2% or less margin. People like them. You get extra benefits. The premiums in a lot of areas are still very low. And I would say that's why we're seeing, the strong enrollment numbers still. And the plans are really, they really cut the rates. Everybody thought it was doomsday on the plan side, but then they created, the star rating system and made them compete and perform on quality to get a little extra payment. And it's crazy out there, all the incentive arrangements they're doing and how they're working with providers, because they couldn't survive in that market without that extra quality payment. It's really interesting to watch, but they're obviously thriving.
Thank you.
Can we revisit for just a minute the Medicare Advantage contracting? In 1997, Congress passed HIPAA. Part of HIPAA was transaction sets and code sets, and part of the code sets was the CPT manual. So I'm wondering, as part of CPT, with the with modifiers being part of that code set, how contractually Medicare Advantage plans can exclude them when they're part of federal, what I would consider federal law under HIPAA.
Well, it's a matter of whether they're paying for them. It's just, there's no mandate that they have to pay anything specific, and that's how.
They don't recognize them, let's put it that way.
Yeah, they don't pay for them in some situations, and you'll see, and it's interesting to go back to the contract, and I know exactly the situations you're talking about. It's interesting to go back to the contract and see the language that allows them to do that. They might recognize modifiers differently or pay differently, but yeah, HIPAA doesn't.
Do we have any recourse if we go through the, and I've had this experience in the past, if we try to go through the contract and line strike things that we don't like, do we have any leverage with that? Because the last time I tried it, they told me, thank you very much, you're out of the plan.
Yeah, and we're actually this afternoon, we'll have somebody from Aetna here talking about contract negotiations. That's, yeah, I know.
Okay, we'll ask that individual.
No, it's you know what it's about? It's about a couple things, and we'll probably talk more about this afternoon. It's about market power. It's about whether they need you. It's about whether you're a group plan with a certain amount of members, you have more market power. It's about what your changes require them to do administratively, how they require them to set up their systems, because for one, physicians in some cases, it's just impractical for them to change their system to accommodate one physician. You know, negotiations there are a lot of things, but you always have to ask. You got to ask, and you'll be surprised what you get sometimes. Sometimes you won't be surprised at all, but you got to ask.
Kelly, there are a couple of questions. These plans are private insurances, right?
They're what?
Private insurances, though they're administering a Medicare product. How subject are they to the rules of recoupment in each state and the auditing rules that they oftentimes tell us we have to adhere to because Medicare requires them to do audits on us? That's a big question right there, whether it's a payment audit or a diagnosis audit, and you know where I'm coming from there. So if you could comment on that, please.
Yeah, well, state law is preempted as it applies to Medicare Advantage plans. And your contract, if you're a contractor provider, your contract totally controls the look-back period for those recoupments and reconciliation. If you're not a contracted provider, I would argue that they can't go back more than 3 or 4 years, just to align with Medicare fee-for-service to make sure you're getting paid in the same way as fee-for-service. What's the other question? I apologize.
Audits.
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 Yeah, the audits happen for a couple reasons. The audits happen obviously because with the pressure on the rates and plans getting paid less, the only way they can make sure they're paid appropriately is to grab all that diagnostic data. So they really, you know, they're getting third-party companies coming in to make sure that they appropriately report all the diagnosis codes to be paid appropriately. The other thing they do, they have obligations under Medicare Advantage requirements to look for fraud, waste, and abuse, and to make sure they're only paying for medically necessary services. So you see audits based on that as well.
Thanks, Kelly, for your tenure with us here. Could I ask, could you go back to your payment slide that you have for your Medicare Advantage? The areas that are sort of mind-boggling right now with a payment, keep going. It's the one that you had paid in accordance with contract, and then you had contracted providers must be paid the same amounts they would under FS.
Well, I
FSS.
did have that, but that's a typo.
Not paid.
No, non-contract providers. I apologize.
Got it. Okay. Okay. So we're definitely, and I think some of the information you've shared about, say, the expansion of many of the, let's just say, you know, vendors who now have multiple of these products in states. Mm-hmm. It's getting certainly very confusing. And so with each of these product lines, are we needing to have contracts with each of these product lines? Because it seems that they're just sort of saying, oh, we're grandfathering you in under these larger, you know, you're contracted over here, you're now going to be contracted with these other product lines.
Yeah, this time of year, I deal with that all the time as plans start to put together their networks. And what controls that is whether your first contract with that company allowed them to add products by amendment. And that's what you see. They'll send you an addendum and say, now you're providing services for our Medicare Advantage plan, and here are the extra terms. So it's a matter of looking at that first contract that you sign with the company and seeing how they can add products. Yes?
If we don't participate with Medicaid at all, can we do some sort of balanced billing for a Medicare patient?
Yes.
The second part to that.
Yes, and I may have not mentioned.
I wasn't sure that was from the very beginning.
Yeah.
I didn't understand it.
Okay, so yes, so if you'll see in that last bullet point, and I didn't specifically push that out, you may have to go through some kind of a state provider registration process in order to be able to bill for that Medicaid cost sharing, but you can.
You
Yeah,
Can you set up an agreement with a patient that desires to pay you?
no.
No.
No, you can't, unfortunately.
But if you
But-
don't participate at all,
Right.
you can bill them.
You can, you just need to call the state and ask them what you need to set up to be in their system to receive the cost-sharing payment.
Okay, thank you.
Yes?
Hi. You stated that with Medicaid Advantage, you're going to have to be registered through Medicaid, though, itself,
Yeah,
but you stated that you would not necessarily have to see Medicaid patients. Does state law supersede that?
well, it's a federal law that was recently enacted, and what it says, so for the Medicaid managed care organizations, if you're contracting with them, you now have to enroll in Medicaid, but under this enrollment process, you do not have to see Medicaid fee-for-service patients. You can limit it to that health plan that you have a contract with.
That's despite what our state law would say, that if you are enrolled as a Medicaid provider, you have to see Medicaid patients.
Yeah, that would supersede your state law.
Okay.
Kelly, you've made it clear that we cannot balance bill QMBs for deductible or co-insurance.
Have you come up with something creative?
Well, no, this happens all the time. Let's say I have a Medicare Advantage patient who is a QMB, and their plan with Medicare Advantage has a high copay. So if it's a $50 copay, and I'm billing a low-level E&M where the approved amount is equal to $50, I end up getting paid $0 for that encounter unless I collect that copay from the patient. What is CMS saying about
That,
copays?
what, part of that, the provision I mentioned to you, let's see if I can, oops, how'd we get here?
I mean, I'd be surprised if CMS expects us to see patients for free.
Really? Shoot. So, well, I can't find it, but basically, what that provision in the Medicare Advantage plan that the plans are required to put in there also says you cannot collect more as a co-insurance or a copay than you could collect under the state program. So if, take Alabama, for example, and a physician visit is a $1 copay, you couldn't collect more than $1 for the copay for that visit.
And that's from CMS?
That is, yeah, that's going to be a provision. Oh, the $1 copay you can get from the patient, but
The rule is federal.
the rule is federal, yes.
Okay, thank you.
Yes. Hello?
Thank you, Kelly, for coming year after year after year, and you look great.
Thank you.
I don't know, is this on? What happens if it's the other way around? I have had cases where the copay is, I've had $75 copays. And if the copay is more than your visit, what do you just elaborate on your visit, or?
That is, you know, I never.
I've asked that question before. I asked Jeff Crowhurst that question. He couldn't answer it either.
Yeah, I mean, it's kind of crazy. You'd wonder why somebody who has Medicaid is enrolling in a plan with that kind of a copay, first of all.
I've seen several of them recently, $75 copays, $60 copays, and sometimes if you're just debriding nails or doing routine office visit, the visit might not equal that amount. So what you do is you probably take some x-rays, do a little bit. No. Anyway, but sometimes the copay can be larger than the actual visit. So do you just tell the patient that you're only going to collect so much copay, or?
Yeah, I mean, you know, I think this is a really interesting issue. I know what the law says, which says you can't collect more of a copay than the state Medicaid program would provide.
Well, we'll table that one. Now, the other question
Yeah.
is, well, I just want our colleagues to know, the Medicare Advantage plans do have a lot of what they call chart reviews or chart review/audits, but you can request money for those audits, and we could request $25 per chart, and they do send the money. So it is something that and we usually tell them, no chart, no money.
Well, and it depends on your contract too. A lot of contracts will obligate you to provide those charts for free. Some say they'll pay, some are silent, and you can certainly ask to be paid for them. And if you're a non-contracted provider, you can certainly ask to be paid for them. But this is only for the diagnostic data. You still have an obligation with where they're asking for the charts to prove medical necessity to provide the charts for that. But yes.
Hi, Kelly. All right, so the ongoing confusion is the fact that if a provider does not participate in the state Medicaid system, and a Medicaid patient walks into a provider's office, can he charge that Medicaid patient for the services?
And we're talking about not a dual eligible. We're
Not
talking
dual eligible,
just
a
straight
Medicaid patient, straight Medicaid, and you do not belong to the system. Now, I know there's two controversies.
Yeah.
One answer is yes, one answer is no, so can you please expound?
Well, I think that's going to be really a factor of your state law.
Okay, so it goes back to
The
that particular state.
Yeah. Yeah, I don't know what the answer is. It'll depend on the state.
All right, thank you, Kelly.
Hey, Frank.
Hey, good morning, Cal. Thanks again for a great presentation, as usual, but very disheartening in the anti-discrimination provision, because we were really hoping that the naturopaths in Oregon, and I didn't know about the chiropractor issue, but it seems very disconcerting the fact that when I mean, I'm not a lawyer, but when I read the statute and when I read the provisions, it clearly stated that you can't discriminate on the basis of scope. You can't discriminate, though, in terms of, I think it was market share, or on terms of
Quality and
quality care, right, based on quality care. So this clearly is evidence of not issues dealing with the quality of care rendered, but this is strictly based on licensure, about scope of practice, et cetera. So it's amazing to me that the courts have overturned that, or they haven't interpreted it in the way that we would think logically as people reading something like this that it would be. So my question to you is, without belaboring that, is, which I tend to do, but having said that, are there any other suits that are coming up? Is there any other interpretation? I understand that under ERISA, we have no standing. So it's the patient that has standing. But it seems difficult for me to envision a situation where a patient under ERISA is going to have suffered damages significant enough to warrant something saying, well, you were paid the doctor inappropriately based on their scope of practice, their licensure, or whatever. And it doesn't seem to me that that's going to be a very viable means of obtaining relief under this anti-discrimination provision. I'd love to hear if there was anything else to comment about.
Yeah, I guess I wouldn't be horribly disappointed by these decisions, like that they're not recognizing, because none of them have been heard on the merits yet. None of them have been, we've got a dismissal, we've got one that said there's not a private right of action. So we haven't gotten an interpretation in a federal court. So it's a matter of knowing how to bring it. I think it's really important because states are implementing laws, and if you know your state's enacting a law, getting a private right of action under that law, under the state law, would be really important and something you'd want to lobby for. What did I miss? I need to be making notes this week.
Is there any suit that's presently undergoing
Through. There are a lot of little suits that aren't exactly right on. There's one dealing with the Filmmakers Guild. There's one dealing with a coverage issue. But they just, no matter how they come out, I'm not sure that they're going to set precedents that's useful for APMA's issues.
Last question.
Okay, last question.
Okay, I have a question for you. I'm a Medicare provider and a Medicaid provider, but I don't participate in a lot of my state's Medicaid managed care plans. So I get a call from the hospitalist, have to do a consult on a patient that has an infection. And so I tell the patient, do I tell the patient that I can't treat you? I can't do the consult because I don't belong to your plan? Or can I treat them because my medical staff bylaw says I have to make the consultation because it's been requested? Can I bill that patient my full fee for whatever I do to them with their prior knowledge?
I think, again, this is going to be a matter of state law, and there's a lot of sensitivity around these hospital consultations where a member is surprised to find out that the doctor that somebody else referred them to isn't participating. Yeah, I think it's going to be a matter of state law to see whether you can or not. That is quite a bind.
Why couldn't I? Because I don't belong to that plan. Because these plans are all trying to get me to join, and I won't join them. Why should I give them my services when they don't pay me fairly for what I'm doing? And so my feeling is why would I do that? And why can't I bill that patient for my full service?
Yeah, I mean, if we're talking about a common sense, if you're asking me, it doesn't make sense. Yeah, but it's going to be regulated by state law, and we all know that laws don't necessarily make sense. And a lot of states are enacting laws to keep people from getting hit with unexpected bills when they've been hospitalized and they've seen somebody out of network. So I can't really, I don't know what the law is. Sorry. Okay.
Thank you, Kelly.